Welcome, everybody. My name is Mina Jane, and I'm one of the programming librarians at the Cary Library. And we are very pleased to be here with Innessa Manning for this amazing talk about finding your financial advisor. We've had many money basics conversations with Innessa, and this is the question that keeps coming up. So we're really happy to finally be able to bring it to you. Before we get to Innessa, though, I did want to say a couple things. One is that I have enabled captions for this program. You'll see them scrolling along the bottom of your screen. If you don't want them, there's a button that says live transcript. Click on that, and you can hide the subtitles if you'd like to. But we love captions because we feel like it makes it more accessible to everybody who wants to join us. We like to thank the Cary Library Foundation with Innessa, which Innessa knows very well, for supporting all of our adult programming. We couldn't do it without them, and so we're very, very appreciative. I am going to turn over and introduce Innessa. I thought I had one more thing, but apparently I don't. So Innessa Manning is a certified financial planner with over 20 years of experience in the financial services sector. She lives in Lexington, and she is currently the president of the Cary Library Foundation, whose mission is to raise private funds to augment the budget received by Cary Library from the town of Lexington. So as I said, this is she knows the foundation very well, but she also knows financial planning really well. So welcome, Innessa. Thank you so much for being here with us again.
Wonderful. Thank you, Mina. Did you want to mention before the recording, or did you already mention that?
I think I said when people came in, we are recording this session and it will be on the YouTube channel, hopefully tonight, and I'll send out the link to everybody.
Fantastic. I was just thinking maybe that's the one thing that you missed. So wonderful. Well, welcome. Well, hello, everybody. I am very happy to be here tonight. As Mina said, I've worked in the financial services industry for my adult career, primarily with institutional clients. But in caring for my mother, kind of handling her financial affairs, I became more interested in the topics around personal finance. So I went through the Boston University program and became a certified financial planner. And we'll sort of talk about that designation during the course of this evening. And I did that in 2018. And I'm also, as Mina had mentioned, the president of the Cary Library Foundation, and I really love the library. I love the topics around personal finance, and kind of sharing a little bit of what I know. So I'm happy to do that this evening. So I have some slides prepared as we talk through this topic. So I'm just going to share my screen. Hold on one second. Okay, does everybody see this title page that says Back to Basics, How to Select a Financial Advisor? Okay, wonderful. I do. Wonderful, great. So as Mina had said, we've been doing these programs for a while, since September, on a range of different topics. And usually, since it's me speaking to a group, the information I'm sharing is fairly general. You know, it's not specific to any one person and their personal situation. So we do get questions during the program and afterwards about, okay, you know, thank you for sharing this information. Now what? I would like to find a financial advisor to sort of help me through this topic and help me figure out how it applies to me. So that's why we thought this would make a good presentation tonight to sort of share how you might approach finding a financial advisor. Okay, so I'm going to switch to the first slide if my computer cooperates. Sorry, it's being a little slow here. Okay, here we go. Okay, here we go. Hopefully you see the second slide now. Okay, so the first sort of threshold question that you want to ask yourself is do you need a financial advisor? So if you're in a situation where you are struggling month to month and balancing your expenses, you know, making sure that you have enough revenue to cover those expenses, I'm going to tell you it's probably not the right situation for you to run out and find a financial advisor. You do have to pay these professionals, and so that's another cost that you're adding to yourself. So really, if you're in that situation, what you want to focus on is developing a budget, developing strategies to save on your expenses, and perhaps increasing your income. There are varieties of different sort of community programs. Sometimes community centers will have programs on budgeting. So there are resources that you can look to there that are economical. There's a lot of articles online for sure, as well as the very first program that I did in the Money Basics series at Cary Library was on budgeting. And so that's available on the library's YouTube channel. So you can always refer back to that. So I think that's just one thing to kind of keep out, to state up front, is not everybody is going to need a financial advisor. So how do you know if you need one? Well, I kind of like rules of thumb, kind of these general rules. It's not absolute, but it kind of gives you a little bit of a guideline. So one rule of thumb is if you have a steady income and you're able to save about 20% of that, that might be a time to look for some kind of financial advisor. If you have a significant lump sum of assets, either assets that you've already saved or perhaps an inheritance, that might be another threshold for seeking a financial advisor. And then another time that you might want to seek one is if you are at or in retirement. That's also a time where you can benefit from. So those are just some general rules of thumb. Another thing that I think is helpful to point out too is that you don't necessarily need to pick one financial advisor and stick with that person forever and ever, and that's the only financial advisor that you're ever going to work with. You might work with different financial advisors for different needs, and we'll talk through what some of those needs might be. You might work with a financial advisor for one part of your portfolio and somebody else for another part of your portfolio. People often do that. Or you might find somebody for your entire portfolio, and yes, you might stick with them for a really long period of time. So you certainly don't want to be switching, annually. You don't want to have like a team of 10 financial advisors. That's way too much. But you don't necessarily need to think about, okay, I'm only going to have one and that's it, and I'm stuck with this relationship forever and ever, because that's certainly not the case. There, kind of things are in your control, and there's some. All right, I'm going to turn to the next slide. All right, so you're at this point where either you're working with a financial advisor or you're thinking about hiring one, and there are just tons of different terms and words that might be associated with this person. So it's not like hiring a lawyer where the credential that you're looking for is, did they graduate from law school and did they pass the bar exam in the state that they're practicing in? Or a doctor, did they go to medical school? Which medical school did they go to? And are they board certified? It's a little more complex in the financial world. So job titles that you might come across, people might call themselves a financial advisor. You might see the term financial planner. You might see the term investment advisor or wealth advisor. So all of those are terminology and sort of job titles that you might see on somebody's business card. And those are a little bit interchangeable. So you might see that. In terms of the qualifications or the education that these people tend to have is, you might see people that have had a business degree, a master's in business administration. That's usually a 2-year academic program. You might see people who are chartered financial, that should say analysts, sorry, not advisors, chartered financial analysts, so CFAs. So they might have that designation. Those two designations, or the MBA and the CFA, they're a little bit academic. They're typically associated with people that might structure the product. If you are looking for somebody with really sort of a deep knowledge and a very practical knowledge of constructing a personal financial plan for individuals, the designation that you're going to want to look for is a certified financial planner, a CFP. And there's typically, I didn't insert it in here, but there's typically a little trademark up there because it is a designated mark that's concurred. And in order to qualify to become a certified financial planner, there's a series of 7 courses you have to take. And there's certain courses on certain topics. And then there's an exam at the end of that, which is pretty rigorous. So that's a certified financial planner. You might see other designations and qualifications on somebody's business card, and we're going to go over what some of those are and how you can assess them. But these are kind of the 3 big ones, the 3 more industry standards. So the other thing that I wanted to touch on, I don't want to dive too deep here, but you might see financial advisors that are registered as broker dealers. You might see that term, or they might be a registered investment advisor. And the difference is they can do basically the same services for you. The differences are going to be in terms of how they are regulated, what exams they have to take, and the legal standard that they have to act in. So a registered investment advisor is a fiduciary, which is a very high legal standard requiring the advisor to act in your best interest, not their own. A broker-dealer has to meet what's called a suitability standard. They have to only recommend products that are suitable for you as an individual with all of your individual needs. The fiduciary standard is higher. So you will have, if you meet with a registered investment advisor, they will be sure to tell you, I'm a fiduciary, I'm going to put your best interests ahead of my own. And that can all be true. But that doesn't mean that a broker is necessarily a lesser a lesser financial advisor. And in practicality, how this breaks down is the regulation and the oversight of people that are registered as brokers is sometimes more than if they are registered as an investment advisor. So although the investment advisor might have a higher legal standard, the broker-dealer is probably getting more heavily regulated. So there's more oversight into their activities. So you can have, I guess, the big takeaway here is that the registered investment advisor might say, okay, you have to hire a fiduciary. It's the only person that you can hire as your financial planner. And that's, I'm just saying that's not necessarily the case. You can definitely find financial advisors that are registered as brokers that are well qualified and are going to be fantastic advisors for you. So it's not an either or type of situation. And sometimes you're going to have people that are registered as both, and those are going to be called duly registered, very unique terms. And then lastly, on this slide, I cover some of the specialists that you might end up hiring. They might be tax advisors or tax planners, tax preparers. There are estate planners. There are that have a legal background. You can also hire people that specialize in separating assets, so certified divorce financial analysts. And you can also hire people that specialize in special needs, so kind of setting up trusts and systems to taking care of children that have special needs. So they're various specialists as well. So you're going to be able to find all this information either on somebody's business card or in their sort of their tagline of their email. And based on what your needs are, you can kind of start picking and choosing, okay, what kind of qualifications, what kind of job titles am I interested in looking at? And we'll kind of walk through how that matches up in a couple slides. All right. So another thing that I think is important to understand is fees. So these are professionals. You are paying them. It's not as straightforward as hiring a lawyer who typically says, I charge X amount of X number of dollars for an hour of my services. It's not as simple as that usually. So how advisors charge is some of them will charge for a percentage of the assets that they manage. And that might be assessed quarterly or annually. It's typically in the range of 1% to 2%. If you find anybody who's charging 3%, that's way too much. Kind of that's out of the bounds of what's normal. It's more typically 1% to 2%, with kind of the industry going more towards that 1% these days. Sometimes advisors will charge hourly. You'll find that in a few situations, and I'll kind of mention where those commonly apply. Sometimes they might charge a flat fee, and that will typically be if they're constructing a financial plan for you. They might charge a flat fee for that. So you might see that in some situations. Then some of the advisors, the ones that are registered as broker dealers, are going to be commission based. And the commissions that they receive are sometimes embedded in the product they sell, so it's kind of passed through. And then sometimes it's a transaction fee based on what you're buying and what you're selling. And then on top of that, you should remember that the investment products that you invest in are going to contain fees too. So if you're investing in mutual funds or exchange traded funds or or in insurance products, there are going to be fees associated with those. And the types of fees that you're going to see are things like they might be called a management or operating fee. In a mutual fund, you're going to see a front or back end, they call them loads, but it's like a sales charge. If you buy or sell within a certain period of time, you might be assessed an exchange or a redemption fee. Mutual funds have something else called a 12B1 fee. And then, oops, I'm sorry. The transcript is right over the words. I'm just going to move this around so I can see what I had here next. So things that you want to be aware of in terms of trying to evaluate the different products is you're going to look for a term called expense ratio. And that's usually something published for most of the products. And so that's what's going to allow you to compare kind of apples to apples. So that's the term you want to look for, an expense ratio. And then as a kind of rule of thumb is exchange traded funds or index funds typically are less expensive than actively managed funds. So that's something else to keep in mind. So I think that's important to understand because sometimes some of these fees are so embedded in the product, you don't really see them. And so it can be hard to understand how I'm being charged for this service that I'm receiving. And I think that's important to understand as you're hiring somebody. My computer's just being a little slow again. So 1 second. It'll get there eventually. Oh, and as Mina said, I think she entered this into the chat below, but feel free to ask questions as we go along. And I apologize for my computer. I don't know why it's slow. Come on, wake up. Why are you not flipping? Aha, okay. Okay, so I was talking about, so you have all these different you have different financial advisors with different qualifications. So how do you possibly pick and choose? So I'm going to suggest that what you want to start with is looking at what products and services you're looking for. And it could be one of these boxes, it could be several of these boxes, it could be something that I don't have listed here. But I would sort of first sit down and think through, what am I really hoping to get out of a relationship with a financial advisor? What are the products and services that I want? And I would actually write that down. I would have that documented somewhere so that when you're speaking to financial advisors, you're going to be very clear. It's very helpful in the relationship to be very clear what you're asking for, because that's going to allow them to deliver back what your expectations are. So some of the things that you might be looking for is you might be looking for recommendations for new stocks or bonds or market investments, or I should also have had it in their funds as well. So you might be looking for new investments. You might be looking for somebody to oversee an existing set of investment portfolio that you already have. You might be looking for somebody who is going to help you with managing those investments and making sort of tax advantageous decisions, so that when you're selling, if you sell at a loss, you can carry that loss forward for a period of time. So then if you sell at a gain, you want to match those gains and losses together. So that's a service that the financial advisor can provide you if that's what you're looking for. But you want to be, if that is what you're looking for, you want to be specific and be able to ask that to make sure the financial advisor can give you that type of service. You might be looking for an insurance product. So if you're headed towards retirement and you're looking for income in retirement, lifetime income, those are typically insurance products. So if you are looking for an insurance product, you want to make sure that you engage a financial advisor that can sell you insurance products. And I'll kind of go through that as I'm matching up sort of what you might need with the qualifications of the person you might be looking for. You might be close to retirement or in retirement and looking for somebody to develop a retirement plan for you. You might be looking for somebody to help you with estate planning and passing assets to heirs and making sure you have the right legal structures in place. You might be going through a divorce or a separation or sale of your business and looking for an expert in that area. You might be just sort of kind of at a situation where you have some competing financial goals. Maybe you have children and you're looking to save for their college education, but you also know that you need to save for your own retirement. Maybe you have student loans yourself and you need to pay those off. So you might have these competing financial goals and you need somebody to help you work through how to either save for all of them concurrently or how to prioritize. I think I mentioned the special needs. There are financial advisors that specialize in that area. So if you have a child with special needs and you're looking to make sure that there's some structure set up to care for them after you're gone, that might be a qualification that you look for, a service that you're looking for, and therefore you need to find a financial advisor that has that expertise. Or you might be looking for somebody to be, I've heard that you use this term before, kind of your financial quarterback, kind of the person that is going to coordinate all of your advisors for you. So you might be looking for a person like that too. So they're just kind of giving you some idea of the various products and services that you might be looking for. And again, this is not an exhaustive list, but just kind of meant to help stimulate some ideas. All right. Yeah, my PowerPoint is not wanting to be very awake today.
If at any time you want me to to take over the share, I can, because I do have your slides.
Okay, I might just, now I was gonna see if I exit out of the screen share mode, if that's better. I might have to have you do that.
Okay. So I'm gonna stop your share, or you can stop it, and then I'll take over.
Yeah, that might streamline it a little bit. Sorry, Mina.
No, that's okay. Okay. And let's see. Let's start with
we're on the colorful one. Yeah, it's much faster for you. It's behaving for you today.
Yay!
All right, so it's one more after this.
Oh, sorry.
Sorry, I probably didn't give you the correct instructions. Okay, so this is the slide I was alluding to earlier, where once you have your list of what you're looking for, it's sort of an if-then. So if you're looking for this, then this is the type of financial advisor that you should be seeking. So again, this is not an exhausted list. If folks have specific questions that they want some advice around, I can certainly kind of hit on other ones. But these are just a set of examples that came to me as I was preparing this presentation. So if you're looking for how do I have a steady stream of income in my retirement, then you want to look for a financial advisor who is also registered to sell insurance, or that they have a good relationship with an insurance broker where they can find insurance products for you. And many times those insurance products are things like annuities, and that can help you with your lifetime income. So that's what you want to look for there. If you need help with estate planning. So if you need help with estate planning, and as part of that help with the estate planning, you actually want the documents, the legal documents to set up either trusts or wills or those types of documents, you're going to want to look for an estate planning attorney, or again, a financial advisor who works with an estate planning attorney and has a good relationship. So you want to definitely have access to legal counsel in that if that's what you're looking for, the set of legal documents. If you're separating assets, either because of a divorce or you're selling a business, again, I mentioned there's some special certifications that you might want to look to see if your financial advisor has, because there's some kind of technicalities there that you want to be sure that they understand. If you're looking for that financial quarterback person, sort of a holistic financial plan, looking at all your assets, you're typically going to want to look for a fee-based financial planner, somebody that might do that holistic plan for a fee, service for a fee. You also want to see, it also could be helpful to hire a certified financial planner in that case, because obtaining that qualification places a lot of focus on developing that holistic financial plan. So that's a good qualification to look for. If you're looking for somebody to manage your existing portfolio, I say stock, I really should have said investment here. So you're looking for somebody to monitor your existing investment portfolio. You're going to want to look for an advisor who either can access your investments at your existing brokerage firm, or who can transfer your assets to where they can manage your money without triggering a sale. So there's something, again, I don't want to get too technical, but it's something called an ACAT transfer. You want to be sure that they can do that. And if you're handing over an existing portfolio, you should have real alarm bells in your head if the financial planner that you're talking to says, well, I'm going to sell all your assets here and we're just going to buy them back over here, because that's going to set you up for potentially a lot of capital gains tax. So you shouldn't, that should not be something a financial advisor is telling you to do. So that's something that you're going to want to check for if it's an existing investment portfolio you're looking for help with. If you're looking to invest a lump sum or an inheritance, and you're looking to, you're looking to make maybe investments in a couple different funds, and you're not anticipating needing to buy and sell those funds frequently, it might be more cost advantageous for you to look for a commission-based broker rather than working with an advisor that charges a % of assets under management. Because if all you're doing is having your portfolio sit in 2 or 3 mutual funds, and you're not buying and selling those mutual funds, and you're paying this % of your assets every year, and you're not actively trading, and you're not actively tax harvesting, and you're not rebalancing your portfolio, you're not really getting much service for what you're paying for. So those are just a few examples, and I'm happy to take specific questions on that. Maybe we'll go through the slides to kind of give everybody time to ask some questions. But these are just, kind of a handful of those types of examples. So Mina, yeah, thank you. Okay, so you have your list of what you're looking for. You kind of know a little bit about how to match it up with the qualifications of the advisor that you're going to be looking for. How do you find these people? Where do you find them from? Well, one great place to start is personal referrals. Your friends and family certainly are great resources to ask. Here in Lexington, we have very active Facebook groups and email listservs, and I see recommendations all the time on those services. You can also ask other professionals that you might work with, your tax preparer, if you have an attorney, they might have some recommendations. Another option is to drive down Burlington Mall Road. I'm assuming most of you are here locally. And as you drive down Burlington Mall Road, you're going to see a number of different larger brokerage firms, Fidelity, Charles Schwab, Vanguard. So those are all large broker dealers. They offer really robust, I call them self-service tools, so online tools. You can buy, sell things on a commission basis. They also have some fee-based services and a range of services. It's going to depend on how much, but what kind of tier and level your assets fall into. But they have a number of different models. What I like about these firms is that they do have their branches locally, and I have always found it useful at times to have that face-to-face contact. So sometimes if you're trying to get something done, it is easier just to walk into that branch and say, hey, I'm trying to do X, Y, and Z. What's the right paper for me to fill out? What do I need to sign to do that? So that can be really helpful. You can also look for they have these firms that are independent broker dealers, and you can look for, they kind of work a little bit like real estate professionals do, where there's kind of an umbrella organization which is going to help with office space and infrastructure and all the registration and training requirements and compliance. But within those larger umbrellas, you're going to have smaller teams of professionals. And so you can look at these firms. They're called LPL Financial is one, Raymond James is another large one, and Commonwealth Financial Network is another one. And you can see which financial planners they have locally. So that's a good source. Usually these are professionals that are primarily brokers, but some of them are duly registered and some of them are registered investment advisors as well. So you're going to have a choice there. Another source could be just your local bank. So a number of community banks and the larger national chains are going to have financial advisors that work there as well. So that's another resource for you. Then there's these fee-based networks. So these are, some of them are newer. So Garrett Planning Network, XY Planning Network, and there's also something called the Alliance for Comprehensive Planning, which is more sort of tax oriented. All of these are networks of professionals that offer fees for services. So they might charge on an hourly basis. So if you're looking for just a holistic financial plan, I would recommend trying to contact somebody in one of these networks. And again, you can go online, search for them. They'll have a directory. You find somebody local and you pick up the phone and you call and make an appointment. Another sort of source like that has an online directory is letsmakeaplan.com, which is a service of the Certified Financial Planning Board, which gives that Certified Financial Planning designation that I was talking about before. There are also what they call robo-advisors, which are sort of automated tools. These are online services. Some of these online services have some human-assisted capabilities that will help you with setup. So think of it like it's a form. You go online, you fill out all this information about yourself, and they're going to tell you, okay, based on all of this, here is what you should invest in. And then some of these services are actually going to be able to help you make those investments as well. There's a lot of options in this space. You know, I would say if this is something of interest, I might kind of steer people towards Vanguard or Fidelity. So those are the robo-advisor pieces of established organizations, so that you know they have a breadth and kind of a longevity to them. And then some of the newer ones that are very popular, there's Betterment, there's something called SoFi. There's so many of them, but I would kind of stick to the ones that have been around longer. I think you have a better opportunity to do that. So, you know, you can kind of go through all of those different sources, come up with a short list of what you think is kind of manageable, like 3 or 4, contact them, say, I want to set up an initial appointment with you. You know, it might be over the phone, it might be via Zoom, it might be hopefully soon back in offices, but you can set up an initial consultation, an initial appointment with them and get a feel for their services. And Mina, if you could flip to the next slide, I think I have, so I have some questions that you can ask them. So interview them. That's kind of what you want to do. And don't be nervous or afraid or resistant to doing this. I think it's a really important step. Not everybody does it. You know, I think too often people get a referral from somebody, they go and they immediately, you know, form a relationship with that person. I think it's entirely appropriate to shop around, take your time. This is a professional that will have a lot of impact on your own financial situation. So it's worth taking that extra time and delving into some of these questions. You can ask some general questions like, you know, what's your approach to financial planning, and kind of get a feel for how they're replying and if their kind of approach aligns with yours. So I think kind of some open-ended questions like that are important. I think you can get more specific and you can ask them, so what products do you offer? Or do you sell exclusively mutual funds? Are there other things that you sell? Do you recommend individual stocks sometimes or individual bonds? What are the fees associated with these products? If you sell insurance, so if you sell insurance, you have to be licensed by each insurance company that you represent. So if you sell insurance, what insurance products do you sell? And you can figure out, you kind of assess, is that an insurance company that you trust? So those are sort of pools of questions that you can ask. You can ask about the services. So, products, but also in terms of services. Do you offer financial planning? Do you meet with your clients on a regularly scheduled basis? What types of reports should I expect to see? How are you compensated? How am I going to be paying you? Another question I think is really important to ask is, especially if you're looking for this person to help you with developing a more holistic financial plan or making projections in the future, is what are the inflation rate and stock market growth assumptions that you use in your model? If you have somebody who says, oh, well, the stock market's done really, really well lately, and I assume that it's going to grow 15% a year forever, that's awfully aggressive. That's somebody who that's probably not reality of what you're going to expect for annualized returns. So if you're more conservative, and I'm quite a conservative investor, this is sort of how I'm biased, you want to look for somebody who's going to say, well, on average, the stock market's grown about 10% a year, adjusted for inflation. That's about 7 to 8% growth per year. I'm not going to recommend that you're invested 100% in the stock market because you need to diversify between the stock and the bond market. You want to keep a little bit of money in cash too. So I'm going to assume overall that your portfolio is going to grow kind of 5-6%. If they say 7-8%, that's probably okay too. But if somebody's telling you 12 or 15%, that's not reality. So the projections that they're going to be sharing back with you, your plans are not going to be based on the reality that we live in. So that I think that's something important to ask about, and then kind of making sure that if you are more conservative, that the financial planner is taking a conservative approach to those projections as well. So yeah, a long list of questions here. Other questions you can ask about are, what are the types of clients that you typically work with? And based on that answer, you can assess, okay, are those clients, do they sound like they have similar profiles to myself? Would you be the only advisor working with me? So if it's a team of advisors, are you the only one working with me, or are there other people I'm going to be interfacing with? And who are those people? Who are the other people on your team? If you're looking for more holistic advice and you do want some tax advice or some estate planning advice, you might ask about the network that this financial planner works within. Do they have ties and recommendations that they can make to other professionals if needed? I think it's important to ask about kind of being clear up front about how often they are going to meet or speak to you. So in what forum? Like how does that interface work? How does that consultation work? And then what type of reporting or analysis or website do I get access to so I can check on my investment performance? So those are all important questions to ask. Mina, if you could just switch again to the next slide. Okay. So once you have your short list, you've asked your questions to 3 or 4 different people, you can also review their business card and their email signature line for what professional qualifications and credentials that they use. There are a lot of professional designations in the financial services industry. Some are pretty rigorous. As we talked about before, the CFP, the CFA are pretty rigorous credentials. Other ones might be just as simple as like sending away, kind of filling out a quick form online, and you're all of a sudden you're certified to do this, or I should say in quotes, certified to use this designation on your business card. So if you want to figure out, okay, what does this designation actually mean? There is this tool. It's available at FINRA.org, investment professional designation. It's here on the slide. We can send this information out to you afterwards, so you don't have to write it all down. But this is a tool where you can look up what those designations mean. So what kind of education was required to obtain them. So that's something good to check out. If you see the credit, or you see the business card, and there's this long alphabet soup afterwards, you want to be you want to understand what that actually means in terms of the professional's credentials and experience. Another thing you can do is, if the professional is registered as a broker-dealer, so registered as a broker, there is another tool available through FINRA, and I should say FINRA is the regulatory body that oversees broker-dealers. And you can check there to see the number of years of experience the individual has, and if there's been any disciplinary actions taken against them. So that's a good check to do as well. And you can do that at something called brokercheck.finra.org. You can also take a look at the firm that the individual works for. How long has that firm been in business? You can do some Google searching to try to find that out. And it's also okay to ask for and call references. Again, that's something that I think is often overlooked when people hire financial advisors. They don't always go kind of down that deep. But if that's perfectly fine, and if somebody's resistant to providing you references, then you can take that as a little bit of a caution sign, I think, for sure. So I guess the big takeaway here is that it's okay not to plunge in. It's okay to take your time, and it's definitely okay. It's always okay to ask questions. Okay, I'm ready. Yeah, thank you. Okay, so if you've hired somebody, how do you maintain that relationship? And I actually get asked this question a lot. I have a financial advisor, I pay them X amount a year, but I don't know what they're doing for me. I don't know why I have this person. Why have I hired them? Well, I think it's like anybody that you hire. If you're a manager at a firm, you've hired employees, anybody or another professional, is that you do have to oversee that relationship. So, okay, how do you do that? Well, you certainly want to look at any reports and documentation that they send you. In the financial services industry, you get kind of overloaded with various disclosures. Some are easier to read than others, but do try to go through them and read them and understand what they mean, because that's important. Check your account online. I think sometimes people might, check multiple times a day. If the stock market's kind of going up and down and it zigzags all around, there's a lot of volatility in the market. So it can sometimes, some people can get really pulled into checking often, and that can be alarming. So I certainly wouldn't say check, 3 times a day, but you do need to check every so often. And in this day and age, you're going to be able to access your investments online. So it's easy to check. It's a quick login, and you can kind of take account of where things are. I would also always recommend, if you have any assets of any size to manage, is read the financial news. You don't have to read long, lengthy reports, but just, if there's an article about the market, how's something doing, if you're hearing about Robinhood in the news, read those articles. I think education and trying to understand what's going on is always important. Try to educate yourself as much as possible. You also definitely want to be able to be speaking to your financial advisor at least annually. It might be more frequent depending on how you're interfacing and what you're interfacing for, but I think at least annually. You don't want to have that go longer in between check-ins. And if you're a financial advisor, ideally they should be the one prompting you, but if they don't, you should make sure that you get in touch with them. And you can ask them when you get in touch with them, ask them a lot of questions. So again, questioning is good. You can ask them things like, how are my investments performing relative to various indexes? How are my investments performing relative to my goals? You can ask them, how much have I paid you this year? That might take them a little bit of time because there are these various layers of fees, but you're definitely entitled to ask them that. You can ask them for what are the fees on my current investments. So there's that differential between what you're paying your financial advisor and then the amount of expenses that are embedded in the fees that are embedded into the financial products that you may be invested in. But you can certainly ask them about both. You can ask them, and you should ask them, are there changes that I should make to my investments? Either because I'm a year older, or I have a child that just finished college, or a child that just finished with daycare and now they're going, that expense I no longer have that expense, or I now have a little bit of extra money. So what are the changes that I should be making to my investments? And are there any new products that you think might be appropriate for me? Things are always changing. There's always rollouts of new financial products out there. So it's definitely okay. And I would highly encourage to ask that question. So that's all about maintaining the relationship. Thank you, Mina. So I always like to end on some resources. So in terms of kind of like next steps, I have a link here. And again, we can send out these slides to you after the after tonight. But this is a link to questions that you can ask, so you can have them all written down. I also provided here a link to FINRA.org. They have an investment center that then links to some of the other resources I had talked about, but also a whole lot more information. So that can be good and helpful to check out. And then the SEC also has a guide about questions to ask about your current investments that can be helpful to review as well. So I know a lot of information. I've now been talking nonstop for way too long.
No, that was great. I do want to go back a few slides because our first question, I think, has to do with this page. V says, could you clarify regarding choosing a commission-based one versus fee-based? If you didn't have many trades, wouldn't a commission-based one rather avoid your account? Is this the right slide for that?
I think one more, yes. Yeah, I think this is probably the better slide. So yes, you're right. If you are just invested in, let's say one stock that you've inherited from I don't know, your mother, and you're planning on keeping that particular stock, and you're also invested in, let's say, 2 different mutual funds, and you're not planning on selling those, then yes, you don't need to be paying a financial planner a percentage of the size of your investment portfolio, because you're not trading in and out. You've made your investments and it's sitting there, and you have no active plans to change that. Now, let's say that you have an investment portfolio of, I don't know, 50 different stocks. And you do want to try to maximize your purchases and sales from a tax perspective. And so you're looking for a financial advisor to help you, as I think I mentioned this before, kind of match the losses and the gains, kind of to net those out. So you're going to be making some frequent transactions. Then that's a situation where it might be more cost advantageous to hire a fee-based financial planner.
Okay, I'm going to stop my share. And there we go with you. So the next question is from Sheila. She says, what is a typical hourly fee for financial advisors? Which I know you talked about early on. It's a little bit complicated.
It's a little bit complicated. It's going to range. I would say, I've seen people kind of do like 125. I've seen more. I've seen kind of like the 250. Sometimes what I've seen more often is, if you're looking for a financial plan, is an advisor will have one set fee for the financial plan that's going to sort of incorporate a certain number of hours of work. So that might be a flat fee. So there's kind of that model too. And then there's the difference between what a financial advisor might charge for developing the financial plan and kind of a set of recommendations. For that, they might charge based hourly. But then when they actually come to the point where they are implementing their recommendations, then you might not be paying them directly. They might be paid based on the products that you're investing in. And that's where some of these more these other fees that was in one of the slides, like the 12B1 fee and the management fee, it's all a little opaque, to be quite honest, from the investor. It's all there. It's all in these, like they have the funds all have what's called a prospectus. And so it'll all be listed, but it is, there's a lot of information listed. So it can be hard to kind of pinpoint out. So that's where if it's a product and you're trying to figure out how much you're being charged for that, you want to look at what's called the expense ratio. And that's going to let you kind of do that apples to apples comparison.
And Jennifer says, how difficult is it to transfer an inherited 401k with its annual RMD? Does transferring cause any complications?
So that's an interesting question. That's a good question. So if you've inherited a retirement assets, and if you, so I'm assuming that, did the question say that she's inheriting that from a parent, or it didn't specify, or a spouse?
Doesn't specify, just
RMD. Okay, so there are different rules. There are different
Mm-hmm.
tax rules if you're a child versus a spouse. So if you are a spouse, then you can roll over those retirement assets into your own retirement plan. And there's no, you still have to take your required minimum distribution based on your own age, though. So that's if it's a spousal, what's called a spousal IRA. If it's a inheritance that you're inheriting as a result of a parent passing, then there's a new requirement where you cannot roll that into an IRA. You have to take the distribution. And I don't know off the top of my head if it's over 5 years or over 10 years, but there was a recent change around that. So that's something I can definitely look up and send her afterwards. But that's sort of what you want to keep in mind. So it's different depending on if it's a inherited IRA from a spouse versus from somebody else.
And V says, is there a free website you can use to analyze your portfolio before you hire a financial advisor?
Well, I don't think there's you can look up some of those websites that I had mentioned. So Betterment, SoFi, and you can see how far you get before they charge you. You can look up Fidelity Go and, or was it Vanguard Go? You could look up the robo-advisor portions of Vanguard and Fidelity as well. And again, they're going to collect information from you, but I don't know the point at which they start charging. So you can kind of see how far you get.
Okay, thank you. TG, somebody says, we have talked to a few people who operate independently, have their own companies. They prefer EFTs, meaning they don't advise regarding specific stocks. Their main concern is, how risky is it that they are essentially one-person shops relying heavily on vendors?
Well, I think then you want to look at the underlying vendors. So exchange traded funds are low cost. So a lot of advisors recommend those because it's lower fee, and it gives you access to it's a diversified way of investing without investing in 20 different individual stocks. It's giving you access to a basket of stocks in a way that's cost effective. So exchange trade funds are often very good products to be invested in. And so what you want to look at, though, is what vendors, what companies are offering those exchange traded funds, and just do a Google search on them. Have they been in business for a while? How long have they been offering these funds? Because if something happens to these, one people shop, you still own title, of course, to these funds. And I guess the other thing I would say to check on is is ask that question about how am I accessing information about these investments? What URL am I going to? So sometimes if it's a one-person shop, they might house everything. Everything might be custodied, sort of owned, and that you can access it through a larger brokerage firm like a Fidelity or a Vanguard. And then if that one person goes away, you still have access to your investments through Fidelity or Vanguard or wherever it's being housed or custodied.
Okay.
So you want to look at the underlying funds, and then you also want to ask that question about how do I, which URL do I go to access information about my current, about what URL would I go to check on those investments? And then based on that, you're going to know, okay, where are those funds actually residing? Where are they being custodied?
Okay. They also said that the people that are recommended to them were recommended by a financial planner who knows their situation. So that's actually a nice thing too, sounds like.
Yes, definitely.
John says, I have several IRAs, 401ks of various types. Can they all be combined under one firm like Fidelity or Vanguard?
So you should be able to do that. You should be able to do that through something the industry calls a rollover IRA. So that's the product that you want to ask for. So choose, who you want to have house those. Give them a call and say, I have these IRAs in these different places. I would like to roll them over to one account. If it's a after tax and a Roth IRA, those you can't merge, so you kind of have to keep the after tax and the pre-tax separate. So depending on the special, depending on the type of IRA, you might run into some problems, but typically, yes, you should be able to combine them. And what you want to ask for is to roll over your IRA.
Okay. John also says that personalcapital.com will analyze your portfolio for no charge. So I'm going to put a link to that in the chat.
Fantastic.
I know, this is like a crowdfunding.
That's great.
Mary asks, are there many pitfalls to switch from variable annuities back to mutual funds?
So you want to find out what fees you would be charged if you did that. So typically with a variable annuity, there's a period of time that you have to hold that variable annuity, and you cannot access your investments in that variable annuity without being charged a fee. And that period of time is usually 5 to 7 years. So you want to make sure that you're out of that time period. So that's something that, in order to figure out, you want to call the variable annuity company and say, hey, I am interested in cashing out my variable annuity. Am I going to get assessed any fees if I do that?
Okay. And Sharon asks, do financial planners charge for interviews?
They should not. No. I mean, you'd have to call and ask, but typically for an initial consultation or an initial interview, no, they should not. I think that would be, to me, that would be a bit of a red flag if they want to do that.
Mm-hmm. I agree. Not that I know anything about this, but I totally agree. John asks, what is the best advisor type to talk with about backdoor Roths and the tax efficiency of different mutual funds?
Let's see. I would maybe try, so you could certainly ask for a referral, kind of in a kind of friends and neighbors and existing professionals that you work with. So that's kind of step one. But step two, I think I would lean towards calling up a Fidelity or a Vanguard or a Charles Schwab and asking the question, is calling the main number and saying, this is what I'm looking for. Who in your organization should I speak to? Because they're going to have access to a lot of those tools.
Okay. And one last question that actually is mine and might not be, maybe you already covered it, is, but when you are looking for what you called a financial quarterback, are they going to know the tax impacts of any kind of financial gains or losses that you have, or are you going to have to get a separate tax attorney?
No, they should. So while a financial advisor is not is not a tax preparer. They're not going to prepare your taxes. They should know enough to be able to understand when they're triggering a capital gains tax or a loss for you. Mm-hmm. If that is something really important for you and you're trying to match the gains and the losses, as I was saying before, it can be helpful to work with some of those larger firms because they have a lot of automated tools that their advisors are using. So you can, the chances of missing something is less than if you're working with somebody who's just sort of a single individual, because that person is probably doing it manually. So there can be advantages. The advantages of working with the larger firms is that the advisors will have access to a lot of sophisticated tools and services. The disadvantage sometimes is that it's a little bit less of a personal touch. So it's kind of that's more or less the trade-off that you're working for.
Got it. Okay, thank you. I was hoping I'd get my one question in. We had some really amazing.
Do I have time for questions?
Sure, go ahead.
Do I have time for questions? Oh, okay. Are there any people who specialize in financial planners for older people?
So definitely, elders? Yes, definitely. So I think what you're going to want to be able to tell them is, are you nearing retirement or are you in retirement? Because that's going to drive different services that they can provide. And again, I would start, if you're looking for somebody, I would start with if you have any existing professionals that you work with to help you with prepare your taxes, or a lawyer that you work with to find if they have any referrals for you, or friends or neighbors. And then if not, there's other resources that I had provided. Try to find kind of that short list of 5 or 6, or 3 or 4, maybe 5 or 6 is too many, but kind of the 3 or 4 range. And then ask them that question. Say, I am assuming it's yourself, say, I am in retirement. I'm looking for somebody who can specialize working with clients of my age. And so what's the typical, do you work with other clients that are in my age range? And have you worked on these same types of issues?
All right.
Okay. And the other question is, what is the amount of money you need probably to make it worthwhile to, like, if you only have like 20,000, will they accept you? I suppose it depends on the firm whether they'll accept you or not.
Right. So some advisors do have a threshold of the level of assets that their clients have. So if you if you're kind of operating in that 20,000 range, 50,000 range, 100,000 range, again, I would probably try to say, I'm definitely not trying to push everybody to the larger brokerage firms like Fidelity and Vanguard, but what they offer, so they offer, the more sophisticated tools and services. They also offer a range of options for people at all income levels and all asset sizes. So that's probably where I would start. And again, it's always surprised me that if you just call that main 1-800 number, their customer service representatives are really well trained. So if you explain to them, this is my situation, this is how much I have to invest, who at your firm I should speak to, you should get a pretty good response from them.
All right, thank you.
You're welcome.
And Effie asks, how helpful are long-range Envision planning in decision-making?
Ooh, so I think that's really helpful if you're working with a couple of different financial goals in mind. So I think that really will help you make that trade-off between financial goals. And many times people have multiple goals, and it can be really hard to figure out, okay, how do I prioritize? How do I achieve those goals? And so, in that respect, that long-term visioning, I think, is really, really helpful. And you can find financial planners that will take kind of that time and care to walk through that with you. You might have to call more than the 3 or 4 though to find quite the right fit, because other financial advisors, you kind of default, I think, a little bit more to being more transaction oriented. But if you're looking for that kind of the goal setting, the long-term vision, I think the more fee-based financial advisors, the fee for services, financial advisors that's associated with the Garrett Financial Network or XY Planning Network, those might be some good places to start.
Mm-hmm. Do you know, Innessa, if there's a local office for the Vanguard group?
Yes. So Vanguard, Fidelity, Charles Schwab all have offices on Burlington Mall Road. So if you drive by the mall, you can go pick up a salad at Sweet Greens or a coffee at Cafe Nero, and you'll see all of them. It's always been a little funny to me that they're all there, literally side by side. So if it's a nice day, and you've had your vaccine and you're fully vaccinated, you can go and just literally walk in to all of them and make appointments and see people face to face.
Excellent.
I think Edward Jones is another one there, I think, if I'm not mistaken.
It sounds familiar. I mean, I think this has been so helpful. I think that you've answered some really good questions, and the overview was amazing. So thank you so much for being here, and thank you all for your wonderful questions. I will share out the video link and your slides as soon as it's uploaded to YouTube. And I appreciate all that you've done in this series, Innessa. I think we've learned a lot in the last few months.
Well, thank you. Thank you for having me. I love to ramble on about finance. So sometimes I go down these topics and I kind of get a little too much in the weeds. So hopefully I've kept it on target tonight.
Absolutely. You never have gone into the weeds for me.
Okay, good.
All right. Well, thank you everybody for being here, and hopefully we'll see you again soon.
Okay. Thank you all. And I'm always happy to take questions if people have some more questions afterwards that occur to them.
I'll put your email in the recap as well, if that's okay.
Perfect. That sounds great.
All right. Awesome. Good night, everybody.
Good night.